Hey everybody, this is John, and welcome to the free video. For today, one of the things I'm keeping a look at is the VIX here, and the markets are it's like 2 o'clock Central, so they got about another hour. But one of the things I want to point out is with the VIX, like this down here, and we're kind of back at this level, is that just as momentum begets momentum, and more people realize that if they buy high and they can sell higher, more and more people do it. So it perpetuates the momentum further than anyone thought was possible. But the same thing happens during compression. And now we're trading so tight that any time, so tightness essentially generates more compression simply because anytime it pokes its head up to the upside or downside, traders are selling put credit spreads and they're selling call credit spreads, and that actually keeps it compressed. And so at some point, just as momentum ends, the compression will end in the markets as well. Initially here, I am, believe it or not, looking for an upside pop in the NASDAQ. We have 30-minute squeezes all over the place, not only in the index, but also in key stocks. Beautiful squeeze here. And looking to see if we can at least get a pop up into, again, I'm personally not looking for a big breakout here. Maybe we do it. I'm just looking that we get a couple of months of sideways where for a while it'll look, periods of looks great, and then periods of weakness and kind of more like that, simply because the weekly squeeze is over at this point. If we look at the dollar index here having a really strong day. Even though the dollar index is so strong, we are still seeing the NASDAQ rally. So one of the things I'm thinking here too is that if for some reason the dollar is weak tomorrow, tech could really pop. I mean, it's holding up in the face of a strong dollar. What happens if we don't have a strong dollar tomorrow? And that could be pretty interesting. In terms of individual stocks here, my favorite tech stock is Google. It just has the best setup on the daily chart. And then also it's got a nice rounded 30-minute squeeze here as well. So I like that one quite a bit. From here, if we look a little bit more at the intraday action, that's Google. But on the S&Ps, kind of these daily quick hits, this has been my main cash flow kind of trade, and we did these all last week in the room. This morning, we came down pretty early into H1 on the L1 on the SPX, and then from here sold a put credit spread. This one was kind of a pain because we had to be in it for 90 minutes, and there was a couple times when it looked like the markets would fall apart. But even while we were making new lows here, everything here continued to turn up, and so that's a kind of a tell. And then boom, when we finally got the move, we're able to sell spreads at 450. Buy them back at 180, and you can make a living doing that. It's funny, as a lot of times people get super excited if you can buy options at 180 and sell them at 450. That's hard. Obviously, it's doable, but selling a spread at 450 and buying it back at 180 is not that hard. I mean, it's a much higher probability play. So always something to think about. From the 30-minute chart here, you can see that after that big run-up, we've essentially been, it looks kind of toppy, but remember, really a strong market will go and trade sideways while its key moving averages, the 5, 8, and 21, kind of move up to it. And so right now I am looking for things to kind of do a little bit of a pop to the upside. All right, hope it helps. You guys have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.